we're here, we're chatting, and obviously the partnership between Fedgroup and yourselves is strong, and you were very much involved in Ridgeview, this brand new shopping centre. But after COVID, we found a lot of developers were focusing towards convenience and neighbourhood shopping centres, which became quite a trend. And I think the reason for that was that people wanted to nip in with their masks quickly, get what they needed, and not have to park and traipse through a big shopping centre. So your strategy, Jason, as far as Fedgroup is concerned, and being a financier of property owners and developers, has that focused a lot towards these kind of centres in the more recent past?
Thanks, Tony. Yeah, look, I think, first of all, good to be here with the two of you. I think it's a pleasure sitting on top here and really being able to take in the good work that Retail Africa and the team have delivered over here. It's not the only example, which is important, but to your point, I think it's, where Fedgroup plays is we try to identify, operators with a particular sort of edge in the market, guys who are on the bleeding edge of where the opportunities lie going forward. If we think about COVID, it was a very difficult period for absolutely everyone. I think a lot of the banks, including ourselves, were cautious around where we could deploy capital, understanding where the sort of opportunities were down the line. Retail Africa, to their credit, identified a number of opportunities. We were able to engage with them very early on. We relied on their execution, their focus, their specialization to deliver on these opportunities, and fortunately we seem to have got the calculation right. And it's at the end of the day, what's so important is choosing the right partners in the space, and we're very fortunate to be alongside Retail Africa, and they've delivered some wonderful products.
And convenience was always a category, but it wasn't considered blue chip. Then COVID hit us, and as you analyse the data of our portfolio and discussing trading activities with the retailers, what became very apparent is as they started lifting restrictions, people's time was limited, and obviously they were concerned about the dreaded lurgy. They gravitated towards convenience.
Yep.
And so the retailers started to see a spike in turnovers in convenience centres. We were fortunate in that prior to COVID, we had been focusing and engaging with owners of convenience centres.
Yeah.
And our particular focus was on the ugly stepchild, essentially the well-located shopping centres owned by investors that were undercapitalised, so they were good locations but run down, and we've been looking at those for some time. We started to say, listen, convenience is where the action is. We need to roll out fast. We don't know how long this is going to be around for. Let's get cracking. And so we started embarking on firm negotiations and an acquisition strategy and a redevelopment plan. And at the same time, obviously, you need money to do that.
Sure.
And high level, we were introduced to the team from Fedgroup, and the appeal for us was the ability that there's a flat decision-making structure. And in this moment of time that we were in, you had to move quickly. We targeted a number of centres, and we were fortunate that we were able to, I think we managed to contract on 5 over that time, and we were able to engage and sell the concept to the Fedgroup team,
right.
And it's particularly the credit committee. And for us, they bought into our vision, and we were able to execute. And I think that was the appeal for us. It was a quick decision-making process, understanding what our plan was. And I think these convenience centres, one of the things that jumped out on us is that the national tenants convenience became attractive to them.
And you guys have worked a number of years now?
Yeah, absolutely. Yeah. I think, this kicked off in about 2020 or so.
Yeah.
So
okay.
we're well down the road, and I think it's again, looking around us, it's testament to the value that's been created here, the value of the partnership type of approach that we try to take, with the right operators. We're not everything to everyone. We consider opportunities on a sort of a deal-by-deal basis. We're agnostic, but we're responsive to where trends are going, where markets are moving,
yes.
and always it's about who we go along that journey with. So this has been a fantastic, partnership for us, and we look forward to continuing into the future. And I think, touching on what Richard says, I mean, our focus from a Fedgroup perspective is we look to leverage a sort of a deep asset specialization, and in this context, property, pairing that with the specialized knowledge of these specialized operators and developers to identify and extract these opportunities. It's the execution requirements. We know the need to turn around these opportunities as quickly as possible to capture them and create that value. It's a solutionist mindset and understanding that not every opportunity fits in the same box. How do we create the right sort of solution here in this particular instance?
Right.
And then again, it's that partnership approach, and those are sort of the pillars that underpin how we approach our business.
And what made Ridgeview different in terms of what these guys had done previously? I mean, this was a tired old centre. I mean, Britt showed me some photographs earlier. It required a lot of work, a lot of capital, and trust in these guys. But clearly, that trust had been cemented over a number of years. But what was the attraction for you to finance this particular operation?
I think Ridgeview was the last of the portfolio that we had funded. So hence the track record was in place. We were very comfortable with where the direction the portfolio was going. The execution was clear. So on that kind of basis, it gives that all the conviction that we need to get the guys on our side of the line and continue to support our partners in developing. And I think it's just there was no deviation from the theme. There wasn't any sort of outside risk we were going to have to take over here. This was a repetition of what had already been proven.
And of course, you've won the South African Council of Shopping Centres award as well.
We did.
And I mean, you can take so many lessons from this, Richard, in terms of what you've done here. Lessons for you guys too, in terms of financing and financing models and how you put it all together. It's certainly something you can take forward in terms of your other developments as well. And I think that award is just like a cherry on the top of what you've achieved here, which is unique. It is different.
I think it's testament to the team. It's not just Retail Africa and Fedgroup together. There's a whole big professional team that stands behind it. And one of the things is that professional team we've used for probably across the board 20 years. So if it's not broken, don't fix it.
Yes.
And all of us have made mistakes in our lives, and we've had wonderful successes. So it's that pedigree and that history. That when you're sitting in a project meeting and you're looking at an opportunity, you sit around and you're spitballing. And all of us have done this all over South Africa. And we can say, oh, you know what, it's like this asset that we looked at buying, or it's like that asset that we did there, and we did this there, we didn't do that there. And you're leaning on that. And that is probably the magical formula. And I've got to say, that's fundamental to the success.
Talk about your the legacy of stability. Fedgroup boasts 34 years experience in providing commercial property finance, and it's only been in more recent times that you've actually just stuck your head above the parapet, so to speak. Just talk a little bit about that legacy and a bit about that background with Fedgroup.
Sure, certainly. So like you said, 34 years, particularly in the sort of property finance investment space. In that period, we've been able to build this really strong internal fundamental understanding of the asset class through experience, through seeing the cycles, the movies and the like. We have very strong sort of internal structures that ensure that we can qualify these opportunities as quickly as possible, understanding how we need to position ourselves in the market to be able to transact. So, I think we, like you say, are only now more recently kind of sticking our heads above the parapet.
But you see yourselves more nimble as
Absolutely.
the more traditional financial institutions.
We recognise that we're throwing our weight amongst the traditional players, a lot bigger balance sheets, a lot more sort of transactions under their belts and the like, and a lot more sort of money to throw around in the wrong places, let's say. So we have to be very articulate around where the opportunities lie for us and how do we execute on those. And I think our history, in terms of demonstrating that stability to our investors, we've never missed investment payments, and it's something that we will look to build on to the future with full conviction around leveraging that experience, leveraging that expertise, building on it, and continuing to evolve in the space.
Yes.
Like you say, we need to differentiate the markets, and that comes down to ultimately our value proposition, which is what I mentioned earlier. Is that deep specialization. It is the ability to partner with the right players. Understanding how we can leverage their nuanced understanding of these opportunities and support them along the way. It's a solutions mindset. It's not one size fits all. I mean, it really is.
You offer a more bespoke type of arrangement.
We need to, absolutely. That's it. And it's a structured solution that is built for whatever the particular opportunity is. We are not, again, everything to everyone. We are sector agnostic, and we're open for business, and we're looking to continue this trajectory, which has been exciting for us.
Yeah.
And there's an exciting vision ahead.